Hi traders, this is Brad Gilbert with the FX Market Insight for Thursday, the 31st of October. All right, happy Halloween for all our traders out there. Now, if you haven't heard it yet, you must be hiding in a hole. The Fed cut rates, but then signaled that was the end of the rate cutting cycle. So it's a little bit of an odd one, right? And this is always hard to work out following a Fed announcement. So they've cut rates. Okay, that should be dollar negative. And then the fact that they aren't going to do any more rate cuts is almost a little bit hawkish, right? So you would expect the dollar to rally. Now, we haven't seen that reaction on the currencies. Okay, if you look at the overall reaction here, their first move was down on, and this may actually just be, the price widening out because, volatility around the Fed interest rate decisions is massive. So the overall outcome here has been dollar weakness. Now, a few of these currencies, the Aussie and Kiwi, are moving to the top side. They look like two pairs that have got a bit more room to go. Dollar yen, bit of a whipsaw price action, but basically back to exactly where it was, so nothing much there. Sterling, you wouldn't even think it was turned on for the day. And euros coming back towards this 111.50, 55 sort of level. No one really wants to push it through that level just at the moment. Is there enough dollar weakness in this? I just don't know. I think the initial reaction to me is, they've cut rates. So dollar bearish. And as I said, I think the dollar will start to rally because you know what? All the other economies are still struggling and they have now sort of gone into another neutral sort of phase. So it's a little bit of an odd one. The dollar CAD had a massive day. Loads of confusion here. That's generally why it's, called the loony. I know it's the loony bird, but so it's a bit of an interest rate differential here. So the Bank of Canada, a few hours beforehand, signaled big concerns about lower growth, dropped their growth forecast, which is bearish CAD. And then even though the Fed cut rates, okay, they have moved into that neutral phase. The Bank of Canada expected to cut rates next year. So there's a bit of a buy dollar, sell CAD situation just on an interest rate differential. But you know what? It's pretty fickle, the whole situation. So to me, I'm still sort of waiting to work out what the hell is going on. So I come back to my analysis and I'm sort of trying to piece this together. Okay, the dollar index a little bit lower on the day, shot up and came back down. Dollar CAD up on the day, but on the rest of the time frames, it's not really doing a hell of a lot. And then you come back down here to look at some of the pairs. Now, euro is close to breaking up, but nothing at this point. Sterling, well, it's been going up on the dailies. It's down overall. The overall trend is down. So not a hell of a lot there either. I think where we could get some really good traction here are the Antipodeans, okay, the Aussie and the Kiwi. Aussie's breaking up on the hourlies. It's broken through on the dailies. This thing is ready to start moving to the top side. It just needs to shake off the RBA sentiment, okay? And that'll be early next Tuesday. We'll have to wait for that. And then Kiwi, well, it's in a bit of no man's land on the dailies, but hourly charts, it has broken higher. I'll show you something sort of interesting. This is where markets get really temperamental. Like the building consents came out on the Kiwi a short while ago. And if I just show you the chart here, it sort of had a little spike higher. It was enough to push it through that sort of resistance line. Now, this is a bit of data that usually would not factor into the market at all. But following the Fed, the markets get a little bit more lively. So positive, so you expect US dollar weakness in the market at the moment. Any sort of stronger data on the other currency side can lead to a decent trading opportunity. So just be aware the best trading opportunities are after the Fed. And I'm talking about a couple of hours, 2 or 3 hours afterwards, things start to look a little bit clearer. So just coming back to the analysis and where you need to start keeping an eye on things is following the trail of the upcoming events. Now, this NBNZ business outlook number is extremely lively. It was the main catalyst for a big Kiwi move many months ago, like 150 points when the numbers fell off the face of the earth. So keep an eye on that. The Australian building approvals will very much like the Kiwi ones that were released about an hour ago or 45 minutes ago. It's a pretty useless number, but it does tell us a bit more about sort of consumer sentiment If building approvals are up, people are happy to start building and spending money, and that goes into that whole confidence factor. Then following that, we've also got some manufacturing numbers out of China. And then as we come into the North American session, we've got a bunch of more good things. We've got the Eurozone inflation numbers. Now, this to me will tell us if Euro goes up through 111.60 or not. Okay, if we get some sort of bounce in the inflation numbers in the Eurozone, which I do not expect, well then, if the numbers are strong, this will go up to and test 112. It should do. Same with the unemployment rate for the Eurozone. If that's a better number, well, then those two numbers together should lead to a move either up or down. That's, I think, one of the easiest opportunities you're going to have over the next 24 hours. Then you come back down here into the North American session. Well, it's a little bit tricky, right? We've got CAD GDP. I don't think dollar CAD knows what it's doing at the moment after the Bank of Canada and the Fed on the same day. Hopefully it makes a bit of sense. You need decent variance here in these current market conditions because now dollar CAD is in the middle of nowhere, right? And then the PCE price index, right? It's the first data release after the Fed. It's a good inflation number. Is it going to change what the dollar's doing? Probably not, but still factor that into the equation if you do have open positions and you want to sort of make sure it doesn't go against what you're trying to achieve. All right. Then there's a whole bunch of big numbers coming out Friday. Of course, the non-farm payrolls will really determine what happens with the US dollar going from here. So that's pretty much it, guys. This isn't a very clear situation. I think what you've got to wait and see if the US dollar weakness drifts into the market. Now, we do have some levels here. Euro, well, to me, there's a chance for a little bit of a stop loss run above 111.60. The Eurozone numbers will tell me what to do after this. I'm expecting, we do have some Aussie and Kiwi numbers. The Kiwi business outlook numbers, keep an eye on that. That's a rule. If there's a bounce in that, then you will see Kiwi bounce aggressively. Dollar yen, I think, is out of the game at the moment. Dollar CAD is in the middle of nowhere, and Brexit has got sterling locked down. So to me, the best pairs to be trading are the Kiwi, the Aussie, and the Euro, right? We've got data on each of these numbers. We have current US dollar weakness working in unison on each of these pairs as well. So you can start to feel a little bit confident what's going on. And that's pretty much where we are today, guys. It's not as clear as I would have hoped, but you know what? It gives us something to work with. And that's all you can ask for. All right, guys, have a happy Halloween, and we'll catch you tomorrow. Cheerio.